Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It is December the 16th. This will be our chart lesson for today, and really just a range day. If you look, we never got outside this till after 2 o'clock, and then it failed quickly as you would expect, and prices came right back in. So it's just a range day, very flat, really, for the most part. The purple area here, there was an FOMC announcement today. And this is really pretty tame, but that's what happened right here. But the issue is, if you don't have a news guard, make sure you get one, or at least make sure you look each day to see if there's any high volatility news items. And the only ones we worry about are the U.S. ones that are red if you're trading the U.S. So we're not worried about anything else. We don't care about other countries' announcements or anything like that. Just the U.S. high volatility scheduled news announcements. That's what you want to worry about. And the FOMC news announcement, it's hard to get out, news announcement is the really big one that you need to be aware of. It's been kind of a no issue lately because interest rates are just not changing. We really have almost zero interest rates now. And so until you get a surprise or something really changes, it's usually not that big a deal. But you can see we still had some excitement. But the real problem is going into that news announcement. And what this is what happens. Everybody gets flat because they don't want to be caught in this whipsaw stuff here. So you can see really the whole last hour there's nothing there. So don't enter a trade during that. At least 2, 3 people ask me about trades right in here. This is very common, and you get stuck in a trade and you get stopped out, or you get stuck in it before the news comes out, and then the news whipsaws you. So you never know what the news is going to do. Even if you got the news in advance, you don't know what the news is going to do. It'll do just the opposite of what you think it will. So don't try to all these ideas that try to trade the news. My opinion is stay away from that stuff because it's you just don't know what's going to happen. And with the FOMC particularly, be flat an hour before that because if not, you got stuck in this and probably didn't get out of it. And then you probably got stopped out or had to exit with a loss or whatever before it went into the news. But you'd be shocked how many people trade and they don't even know the news is coming out. You need to know these things. If you're going to be a professional trader or trade with money, you need to know what you're doing. So make sure you get a news item. You can't see it up here, but when I opened my chart this morning, it tells me all the high volatility news items and what time right here because I have this news guard installed. If you're a member of our website premium section, you can download it for free. So if you're not, then you probably can find one somewhere on the internet that works for free. But make sure you get one. So that's what this purple area is. Get out about an hour ahead of time, which means be out at noon, and that's where this pretty much starts here. And wait till it settles down and becomes normal again, and that was right about in here. Yeah, there's a big, huge rally here, but I don't think and that could have been news driven, but you're not going to get caught off guard. There's a setup here that gives you this, that alerts you to this. And if you didn't get this trade, catch this trade, then you're not going to get another one till way up here in the opposite direction when we have a sell up here. So just wait for it to settle down. Usually it's 15 to 20 minutes. On a really crazy day, it might be an hour. But right now it's been averaging 15 or 20 minutes till things kind of settle down again, and then you can start trading normal again. So I hope that's clear. But let's back out. There's not a lot of trades today because people are just waiting on this announcement, and then right in here, that's exactly what's going on. That's why nothing's happening. Everybody's is exiting and getting on the sidelines or just sitting still and waiting. That's where you need to be, sitting still and waiting and on the sidelines. Because the average small retail trader can't afford to be wrong on something like that. All right, we backed out enough here. Let's talk about the trades. I mean, it's real obvious when we come in, we're trending up here during the overnight, but as 7 o'clock came, I'm trying to remember, I think it came right in here as we're starting to work down. But the trend is still up at this point. I don't have this trend channel on here, but let me get it on here. Actually, I'm going to use my new toolbar. I got to get in the habit of going up here. This one, it could be more like this, but I drew it like this, right off those closes. And I feel like that's going to get you where you need to be. And you can see that. You can see the midline coming into play. But anyway, we got the close outside here, but I consider this a double top. So you're moving down first entry, second entry. So there's your second entry. It's not a great signal bar, but look how many times we bounce there. And you could call this a failed second entry short. Usually you're not looking for second entries or failures when you're in a range like this, but the trend is still up here, and this is the first close outside. So you could still play this one if you wanted. I made it green. It's a little bit aggressive, but it's still a play there if you like that. I really like the short too because it's a triple test. But the fact that this one made an inside bar and didn't go lower, it's starting to look like congestion, and we could bump up for another leg because there's only one leg up there. So I think you have to skip that. But we drop down, and now we're working down. And finally, you get a lower high here. You're really just in this range. Really, I think that's your highs right there. And you're in this little range. You get a failed break out the top, then the bottom, and then it comes back. And actually, I had this higher here. I think it's more like that. So you get a little breakout pullback short, but it verifies that trend line too. Notice you're coming down, and you got your two swings there, and then you get a third touch right here. And it's a little breakout pullback short, but it's a lower high after breaking out. And notice how we can't close back inside that little channel right there. So it comes back and tests it, and a lot of times it'll test it a couple times. It actually comes back again here. Unfortunately, this is an inside bar. If it would have broke higher or even been equal, I would have said you could enter here as well. But I like entering here. And you might expect another leg down. Of course, we got our new measured leg tool there. I got to get used to using these. You bring it down. I would probably say that's the low right there, and then there's your measured move. We didn't quite get that, but we just bounced at the overnight lows, and that tells you we're probably going to have a range day. But anyway, we bounce here. I don't see any reason. There's no rejection here, so you got to be real careful. Although we are a long way away from the EMA, and you could call that a triple test. It's not a good enough signal bar. Wait and see if you get a reversal. And I just call that a new bottom. And so you got one leg up with the first entry short, and then you got a second leg up with a second entry short, and then prices break higher. I marked this one green because we had this inside bar and then another inside bar. So you got all those matching highs. Really, this thing, if it's going to be a failure, it should have taken on off. And so you see it does rocket out of there, probably just hit a few stops, and then we're just kind of working sideways again. But you can see the channel is still in play, and then by that time we get a little more evidence. But here it's not, you can't say that we may not go lower here. But I still like this one for a failure as a trap because you can see it was a quick, easy scalp, and that's really all we're looking for. So if you recognize what's going on there, you could take that trade as a failed second entry short. Then we make a new high, first entry, second entry. And I marked this one blue. The way I would trade this one, I wouldn't wait for this to close and enter way up here. And this one actually did not break lower here before going higher. But I still think with this being a second entry and this trend line being obviously confirmed with the EMA below it, when this thing went higher and broke higher here, you could have a buy stop there. It's a little different. I probably should make this one green for that reason. But we hadn't had a lot of trades, and a second entry off the trend line with good support there. You could say, hey, that looks a little congestive too, but you can clearly see prices are working. It's a little two-legged correction, basically. One, you actually have two legs down and then another two legs down. So there's four legs that equal two legs. That's probably complicated. That probably confuses some of you, but if it does, don't worry about it. There's a couple of legs down there. And so I like that one. On a day like this, a slow day, it's probably going to be good for a scalp. Maybe nothing more. On days like this, you probably don't even want to try for runners. Just scalp out because prices are not moving. I mean, here you got a little bit of movement and a couple of moves over here. You got a little bit of movement, but you're just not getting a whole lot of movement. So, but anyway, you get another second entry here, but there's also a little, let me just draw it on here. There's another range here. And I don't know, I'd probably draw it like that right there. So the key is when you break higher here, you need enough room to scalp out. Because see how it touched and it backs up and then it eventually went higher, but you don't know that it will. My guess is its prices are going to try to make a new high, but just make sure you got enough room to scalp out. And if you don't, let it break higher, drop a limit order far enough in that you do have enough room. And really, if I don't know if this broke lower or went higher first or not, I'm not sure. If it broke lower first and then went out, you could actually buy with a buy stop one tick above that one, and that gives you plenty of room. But if it didn't, or you missed that, and you have to use this for your signal bar, you have to have enough room. So either if you drop a buy stop here, you have to have enough room to scalp out before those highs. And if you don't, uh, let it break higher and drop a limit order and see if it'll back up and fill you and then give you enough room. And really, just looking at this, I would probably move that to right there because that's where you get the most closes and touches it together. And that's how I usually figure that out. And you might even have this one just a tad higher, like right there. And that would bring this back down. So that's more how I would see that. But anyway, turns out to be a nice move. And you're just bumping along here. This is congestive, but hopefully you can understand why, because we're way away from the EMA when prices are not getting away from it very far for very long. So we're probably going to snap back. And this is a first entry, second entry short. So you might take that trade. If you got it, again, the key is having enough room. If you don't, you might use a limit order. And I marked that one green. It's a little more aggressive because there's congestion there. But if you understand what prices do, you understand why you probably have congestion because we're getting too far away from the EMA on a range day and prices are going to snap back soon. What you want to do is just assume that this trend, this EMA, not trend, is like a magnet. And when prices get far away from it, they pull it back to it. And when they get to it, they repel it. And if they don't, something's going on. Like right here, when this didn't really bounce, you can see how this is just, it's not getting rejected here. Notice when prices came back here, how they got rejected and rocketed off. Here they come back to this support and they don't get rejected and they actually push through it. Now, that's not a good sign for going long. So even though prices rocket back up and give one more test. But anyway, I marked that one green. Now you got a triple test over here. Again, I marked it green because there's not a lot of room here, and this is looking like it might be going to set up a range. You may take that one. There's a lower high here for sure, but you definitely don't want to go short into the middle of this range, into this support resistance line. See how it's been acting as resistance, then support, then resistance, then support, and resistance again. Don't go short or long into that really. So I just think that's too congestive. Then we bounce and go higher. There's a higher low here, but now you're right back into this resistance right here. And if you draw this line across, it's still coming into play. And you don't want to go long into that. But prices end up failing out the top. And just going sideways again, you can't enter in that. It's just too tight. You finally get a breakout in the lower high, and it does look a lot like a repeat pattern from back here, but the problem here is your signal bar is just too neutral. Just no entry there. But you start trending lower, and then finally you get another little range and another failed breakout. Same thing here. You got to have enough room. This one, since the trend is down, again, it's what's happening is you're finding support and you're finding support along that midline of the range. That's what that blue line is. That's just the center of these high and low of the range. So you're finding a lot of resistance there. I marked this one because it broke higher above all these. You can see it broke higher and then turned down. The key here, again, is having enough room. So when it broke lower, you might drop a limit order in there and see if you can get in there. I doubt you could because it drops on down and then gaps over. I think it's a little dangerous to go short right here. And I don't know if you'd have had time because it just rockets on down. This really trapped a lot of people here. So if you could get in with a limit order, do it. Otherwise, I don't think I would enter down here because you're going short. You're in congestion and you're going short right into that support right there. You can see that it should be right about there. And then that takes us into noon. You don't really get another entry. It takes us into noon. Don't enter in here. Definitely don't enter in this. Somebody sent me their chart and they went short right here, I think, because they thought it was the second entry. And they actually had their range drawn something like, or trend channel drawn something like this, I think. Which maybe that fits too. But I really think you had to be playing this one with the close and outside. That takes you into noon. So there's just, if you just follow the noon rule, you don't get stuck in this. But regardless, even if you see this right here, you still get the break, and you don't want to enter in that. You can see that little range right there. You don't want to enter in that. So no matter how you saw it, don't enter in that stuff. And you really can't enter this whole time. And then finally, the news pops out at 1 o'clock, and you can see how it acted crazy there. Right at 1 o'clock, that big bar right there, and then all these big bars compared to what we've been at. Then it kind of gets down here and it finds some support. Next thing you know, it's looking a little more normal again. And the way I played this one, you got a new low, a first entry, and then a second entry, it fails, and you can go long. It closes above that EMA. That's a reversal pattern. I like that one. I'd draw that trend line right there too on the yellow, but draw this one, this steeper one here. It should be should be a little bit steeper there than that. I think it looks more like that right there. So there's a reversal pattern there, and that's the move of the day. And just ride it all the way to the top. You got your first break here. That's why I would exit a few ticks in front of that. Be done with that. And you can't get much more than that. If you just exited a few ticks in front of the high of the range, then you get out within a few ticks of the top. You just can't outdo that. And notice how far away from the EMA we've gotten. And notice you get a lower high here with a nice bearish bar. You might, it's just after, I mean, that's just barely even 201, so that's close enough. You could take that trade if you wanted. There's a lower high here, again, just a couple of minutes, but now you're getting close to the EMA, and you can see you got a little bounce there, so I'd probably skip that one. But if you want to take that one, as long as you got enough room to get out, you probably, because notice on this, you've had your breaking new high, and even if this yellow one is valid, you've got an overshoot. And plus the range is probably going to take precedence. You don't know that, but as you can see, you did get a break here and still moved higher. And I haven't played with this since I originally drew it, but maybe it just doesn't fit there. Your midline doesn't look right. right there. Now you could argue for that one, but you still get an overshoot here. So yeah, maybe that's it right there. Yeah, I like the way that looks. I originally had it drawn like that, I believe. Is that how I had it drawn? I can't remember. I think I had it drawn like that. But now that I look at it, if I didn't, that looks, maybe I did have it drawn like that. I don't know. I can't remember how I had it drawn originally, but anyway, that looks correct right there to me. If I had it lower, then it looks like there's two tiers on it, and we still had an overshoot. So that's still, and that leads to the break. Two legs to a new high. Perfect price action, really, and then we sell off again. And we were able to notice that not only did we get the new high, we broke out of the range. And what do you expect to happen? It fails. It took a minute, but it works right back into it. Closes almost in the middle. Perfect price action today, really. Slow and methodical. It's you know, this is got people. You know, I've seen a lot of posts in the forum. People just saying, you know, this is getting so hard. You know, just as soon as I take a trade, it goes into congestion, and you know, you just can't. You know, I'm flustered. And look, we're going into December, the end of the year. This is the slow time. This is just, and this market's not that slow. There's still a lot of volume here. It's not like it was the past year, which was incredibly crazy, probably as crazy as I ever remember it. But this is more typical, and this is exactly what you expect when we're going into December. That's why I'm going to take off here in another day or so. I think I'm going to come in tomorrow, and at least there'll be a mid-morning chart, and I'll probably trade an hour or so. But I may take off at noon and be done for the week. I just haven't decided yet. I may even take the whole day off. I haven't decided yet, but most likely I'm coming in the morning, do my usual thing, and then when I'm done, I'm probably checking out for the rest of the year. So um, obviously I'll, you know, if there's any emergency things, emails, anything emergency with the website or something, I'll address them. But other than that, I probably won't answer emails or look at anything. So um, anyway, in case this is the final video, I hope everybody has a great Christmas and wonderful New Year, and that you're blessed and happy. And if I do talk to you again before the end of the year, that'll be great. And if I get bored during the holidays, I might come in and do a chart lesson or trade a day. Who knows? But most likely, I'll take the rest of the year off. I got some personal things I've been working on, and they'll give me some time to work on that as well. And so my plan is to really take a vacation. I hadn't had a vacation this year, really, because of the virus. And I haven't been to Brazil now in 2 years. I usually go to Brazil for 2 weeks every year, and I haven't been able to do that. So I really have had no vacation, and I need a break. So other than the 4-day weekends, that's the only break I've had this year. And it starts to get monotonous. I love what I do. I love trading. That's why I do this, because I love trading. I love everything about it. And I'm drawn to it like, you know, flies to honey. So anyway, it's hard for me to walk away from it. You know, I keep saying I might retire, and I always change my mind, and I probably will eventually, but it's probably going to be a couple more years. So anyway, I'm going to wrap it up again. I hope everybody has a wonderful holiday period, that your family is blessed and safe, and you're virus free over the holidays. Be careful out there, and maybe I'll talk to you again another day before the end of the year, but this might be it. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.